Tether, USDT, is a stablecoin pegged to the US dollar, USD, at a 1-to-1 ratio, meaning 1 USDT equals $1. Unlike Bitcoin or Ethereum, whose prices fluctuate wildly, Tether aims to provide stability by being backed by reserves, including cash, cash equivalents, and other assets. Launched in 2014, originally as Realcoin, Tether is issued by Tether Limited, a company closely associated with the cryptocurrency exchange Bitfinex. Tether, USDT, is the number one stablecoin, offering dollar-pegged stability for trading and transfers but carries centralization and transparency risks. Consider alternatives like USDC or DAI for different needs. Tether operates on multiple blockchains, including Ethereum, Tron, Solana, OmniLayer. This multi-chain support makes USDT highly versatile for trading, lending, and cross-platform transactions. Tether has faced legal action for allegedly not holding enough USD reserves. In 2021, Tether settled with the New York Attorney General for $18.5 million over misleading statements. However, Tether has faced controversy over whether it holds enough reserves to fully back all USDT in circulation. Despite this, USDT remains the most widely used stablecoin in crypto. Why do people use Tether, USDT? 1. Stability in volatile markets. Traders use USDT to avoid price swings while staying in crypto. 2. Fast and cheap transfers. Sending USDT is often quicker and cheaper than traditional bank transfers. 3. Trading and liquidity. Many exchanges use USDT as a base trading pair, e.g., BTC/USDT, ETH/USDT. 4. DeFi and yield farming. USDT is widely used in decentralized finance, DeFi, for lending and earning interest. Tether, USDT, is the most popular stablecoin, but its centralized nature and past controversies mean users